Good morning, my dear students. I hope all of you remember what we were doing in the previous class. Let's continue the previous class topic. Okay?
Okay students, in yesterday's class we were discussing about the industry analysis and its objectives, right? Now we are going to continue with the components of industry analysis. See, the purpose of industry analysis is to identify which industries will be good for investors in the upcoming environment. So, the investors will not blindly invest, right? They are going to analyze which industry is doing good, whose stock prices are high, who is making good profitability, and which industrial products has good demand in the market. Based on that, the investors will decide their investment. Now, here there are some of the components the industrial analysis will relate to. They are going to analyze based on competitive structure, permanence, phases of life cycle, vulnerability to external shocks, regulatory and tax deductions or tax conditions, labor conditions, historical financial performance, financial and financing issues, industry stock price valuation. This question is very important, students. In the previous year's question papers, they have asked many times for 14 marks. So, in today's class, I am going to explain all these points one by one in detail. Okay. Now, coming to the first point, that is competitive structure. Now, competition means what? There are so many companies under one industry. Suppose if you take a textile industry, you have so many competitors like Raymond's, Radon Taylor, Peter England, like that. So, the competition is more. Now, here description of the current state of products market indicating how many number of competitors are there in one particular industry, relative strength of each competitor, that is how well they compete with each other and what is their status. For example, some products they are very high, very profit making, and their branches will be expanded a lot. No one else can compete with them. For example, now when Jio came into the telecommunication industry, they have captured the entire market, right? So, whatever the prices they cut down the other competitors make, still they are not able to withstand with the Reliance. So, that is the strength the competitor is having. Then the level and demand and supply, like what is their demand for the products and what is their supply condition. Then ease of entry into the market. Suppose if any new entrants want to come into that particular industry, is it easy or is it difficult? So, this is how the competitive structure, these questions have to be answered when a person wants to come into the industry. So, an investor makes an analysis based on competitive structure and then he will decide whether that particular company will fetch him profit if he is going to invest in that particular company or an industry. Now, let us move on to the second point. Permanence. Now, what do you mean by permanence? Staying permanent or living for a long run, sustainability. Now, the industrial analysis will be done by the investor to know the knowledge about the sustainability duration of the industry. Will that particular industry is likely to survive in the long run? Are there any major technological threats that the industry might fall? So, such things has to be analyzed by the industry before he is going to invest. So, based on the survival permanence, he will decide his investment. Coming to the next one, industry life cycle. The investor is going to analyze the industrial life cycle and their phases. Their phases are, as you all know, growth stage, then introduction stage or checkout stage, maturity stage and decline stage. But these stages he is going to analyze based on the time duration and what is the industrial output the industry is producing. Here the investor has to analyze based on the returns and the risk he is going to face in the cycle. Suppose if he is going to invest during the introduction stage, it might be risky because the product might be successful in the market or no. Or if he is investing in the decline stage, then again it is a risky. So the investor has to analyze under what stage the industry is surviving and will his investment be safe or no. Coming to the next one, vulnerability. Vulnerability describes the characteristics and circumstances of a community or a system or an asset that make it susceptible to the damaging effects of a hazard. See, I will tell in simple. Disaster or hazard means you should be ready for future circumstances or future dangerous things which are going to happen. For example, if there are earthquakes or tsunami, natural calamities and all happen, right? So, in the same way the industry also will face certain situations like vulnerability. So, they should be ready to face certain situations. So, here it depends on supplies of key commodities and major portions of the industry may be vanished due to foreign investments or foreign governments. When new products come into the market, they might be fully vanished. So, what steps they are going to take in future depends on that. That is called as vulnerability. So, the investor is going to analyze whether the industry has been ready for vulnerability situations. Coming to the next one, regulatory and tax conditions. See, the industry has to pay the tax on time and they should follow all the regulatory changes that happen in the industry. So, what are the current regulations? They have to keep updating themselves, and what are the new regulations which are going to come in the future? They should also be ready to accept the changes which are going to happen in the future. So, they cannot be fixed or constant. They have to be ready to accept the changes and go according to that. Now, the next one is labor conditions. See, here the industry analysis has to be done based on what percentage of industry workers are unionized. How many children employees or women employees are there? Are there any complications in the unions? Whether unionization is increasing or decreasing? Are there qualified workers in the industry? So, based on that, the industrial growth also will be depending. So, the labor conditions has to be analyzed. Coming to the next one, historical financial statements or historical financial performance. Here it reflects the past performance and they are usually prepared on a quarterly and annual basis. Here publicly traded firms are required to prepare financial statements and make them available to the public. So, here the investor is going to analyze based on historical financial performance of the industry. So, he can predict the future depending on the historical or past performance of the industry. So, it gives him a clear picture about the prediction of the future. The next one is financing issues. Now, there are so many issues related to financial performance of the organization faced by the industry. What are the debts? Are they able to pay the debts on time? Is there a mix between fixed assets and current assets? Are they able to balance the fixed assets and current assets, and if they need any new assets, are they able to replace the old fixed assets with that. So, all these financing issues also should be analyzed. The next one is stock valuation. See, which particular industry stock prices are high? What is the economic condition? How does an economic condition reflect on the stock prices? What are the stock prices which are low in the particular industry? What is historical average price earning ratio? So, based on what kind of capital gains, dividends historically been generated, the stock valuation also gives a clear picture to the investor whether he wants to proceed with his investments or no. Okay students, I hope all of you have understood all the points related to components of industry analysis. As I told you, this is an important question. Okay. In the next class, I will be posting the notes. All of you write down and study well. Okay. Meet you all in the next class.